Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. First, an update on some key earnings after the bell in the U.S. Apple's revenue in China fell well short of street expectations for the latest quarter. But even with that disappointment, Apple's overall revenue growth was 8%. We got reaction from Gil Luria. He is head of tech research at D.A. Davidson.
If we can count on anything China to contribute to Apple, it's volatility. The quarter-to-quarter results, they vary so widely. And often the checks that we hear ahead of a quarter are directionally wrong or completely wrong, as is the case this time. Some of that has to do with some selling up front last quarter. They had better activity last quarter. They probably sold into the channel more than the market required, which is why we're seeing it down this quarter.
That was Gil Luria of D.A. Davidson. Now, Apple also gave an upbeat forecast for the holiday season, saying revenue in the current quarter will rise by between 10 and 12%. We also heard from Amazon. The company's cloud unit posted its strongest growth rate in nearly 3 years. Revenue for the latest quarter, $33 billion. That's an increase of 20% from last year. Here is Bloomberg analyst Poonam Goyal.
They hit it out of the park. Sales were very good across the board, across all business segments, AWS, online, advertising, even physical stores. So from a top-line perspective, very, very encouraging results. In fact, AWS was probably the bright spot here. 20% gains. We haven't seen that in a while.
That is Bloomberg's Poonam Goyal. In a moment, we'll take a closer look at these earnings with Ross Mayfield. He is investment strategist at Baird Private Wealth Management. We turn next to U.S.-China trade. Presidents Trump and Xi striking a one-year truce. Now, the U.S. has cut the fentanyl tariff and extended the existing truce on reciprocal tariffs, while China will resume buying soybeans and allow rare earth minerals to flow. The agreement is likely to just stabilize relations rather than resolve some fundamental differences. We caught up with Max Baucus, former U.S. ambassador to China. He spoke earlier with Bloomberg TV host Shery and Avril.
Give us your reaction first to this agreement, because it's not like we haven't heard this before. A positive tone, but when it comes to actual follow through, not much later.
That's right. Actually, there is some good news. And the good news is there's a one-year truce. Things could be worse, but at least there's a one-year truce. Essentially, it's right to withhold judgment because, we've had agreements before, they just haven't held up. I'm a little more concerned about this one, too, because President Trump is a little more whimsical than prior American presidents. So it's unclear what he's going to do. Add to that, he's dismantled the National Security Council in the United States. So there's much less coordination among U.S. departments, and there's really not much of a long-term strategic plan toward China as there really should be. So we have reason to be concerned. Another real message for me out of all this is this looks like two world peers trying to figure things out together. And we are peers, the United States and China. And China showed that it's not going to back down to the United States, that China can stand toe-to-toe with the United States. And I think President Trump appreciated that. I think that he gained the respect of President Trump, that is, President Xi being strong. Because look at what Trump's done in the past. He's bullied a lot of different countries to back down. He's bullied some institutions in the United States to back down, like universities, the media, and even some companies. But President Xi has not backed down. President Xi has stood tall. And I think that President Trump respects that a lot. It's going to help, frankly, President Xi down the road, and maybe even establish a better relationship between the two presidents.
That was interesting, right? Because we have been watching President Xi Jinping really play the long game. President Trump, his negotiating style, he wants those short-term gains. Was it surprising to you then that he didn't really concede anything when it comes to the most advanced NVIDIA Blackwell chips?
I think that Trump has to be concerned about the hawks back home. There's quite a drumbeat at home that these chips, the Blackwell chips, if Trump agrees that they can be sent over to China, would cause too much consternation among the hawks of the United States. And I do, so that does not surprise me. It's interesting to me to see whether Jensen Huang can negotiate some kind of an agreement with China, because, as we know, at the summit, President Trump said, well, that's up to NVIDIA and Jensen Huang in dealing with the Chinese. So we'll see.
Ambassador, do you perhaps think that then the U.S. president, following on from his trip in Asia, runs the risk of not coming off hawkish enough on the Chinese, which is something that both sides of the aisle seem to be able to agree on?
I think there's a slight risk that he does not come across hawkish enough. Whenever there are discussions in the White House and the Oval Office about China, President Trump is usually the most dovish in the room compared with the other hawks in the room. But on the other hand, and I think some of the hawks in China see that Trump was not as strong as he otherwise could it be. But on the other hand, both China and the United States know they need each other. And there's a reason for this 1-year suspension of difficulties between the two countries. And that's because both countries want to buy time. And both countries know they need each other as they grow and as they decouple, probably even a little more, and as each country becomes a very strong economic power. We have two peers in the world today. And I think that there's some good news there. That is that each side now respects each other more.
Do you think that whatever's been achieved out of his Asia tour can be counted as a success? Because the backdrop, of course, is that he's embarked on this at a time where we're coming up to a month of a U.S. government shutdown. Does he have enough to show for all this, the U.S. president?
I think the two are unrelated. He did get some achievements, some success. You know, China did agree to buy some soybeans. I don't know how much, but they're going to buy some soybeans. In addition, China said it suspend some of its export controls on rare earths. We have to see how much that will be. So President Trump did get some success, and also the agreement on ports that helped a little bit, and also the agreement by China to try to address fentanyl. But those, you know, I don't think, as has been pointed out by many observers, there's no structural change in the relationship. It's still going to be very complex, very, very difficult. And this was basically a time for the two countries to kind of pause, you know, take a deep breath, let's see where we are, build up our own economies, and then come back hopefully in April at the next summit and maybe build on what we have.
At least after all of these tensions with China, has President Trump finally realized that he needs the help of global allies? I mean, he came into this meeting with all of these agreements with ASEAN and Japan and South Korea as well.
He knows that intellectually. That's why he was, visited Malaysia, Korea, and Japan. But the question is follow-up. When he goes back home to Washington, he's back home already, he faces a different reality, and it's difficult to follow through, especially with President Donald Trump. It's very difficult to follow through. But that's separate, I think, from the problems he's facing in the shutdown. I very much hope that he sits down now with the leaders in both parties in Washington to solve this shutdown, because a lot of people in America are getting hurt.
So what's next for this relationship? We've had this Trump-Xi summit. We understand that the leaders will meet again. If there are no structural changes at the moment, what's next?
Well, obviously, we don't know. First is to look at the details. A lot of nice words, but let's see what the implementation is on export controls. I mean, it's almost stunning that President Trump backed off on new export controls. That's a national security issue. And it's the first time that a national security issue, export controls, has been on the table as an economic issue. That's stunning. That's a big give by President Trump, and the gain for President Xi. No, I think, both sides will take advantage of this truce, the suspension of difficulties, to try to build up their own economies, to kind of figure out what they're going to do next. But I do think that because both countries realize that neither can push the other country around, that they're going to each has a healthier respect for the other, and I think that should help. I very much hope that it does. The big unknown here is Trump's personality, because he changes his mind so quickly, and that's a concern.
Ambassador, you said earlier, noting that in this, I guess, changing relationship between the U.S. and China, that is seen as China standing tall. In your experience and engaging with China, what is your sense of the extent in which this trade war 2.0 and the changing relationship differs from the first iteration?
Well, the first iteration was a so-called Section 301 investigation, and it alleged and enacted tariffs against China. There were significant tariffs against China, and also exacted a promise from China to buy a lot of American products, and that never materialized. But the key point here is that the big difference between Trump's first presidency and now his second presidency, and the difference is during that period of time, 6, 7, 8 years, China has begun to take Trump's measure. China has begun to understand Trump. China knows how to deal with Trump. That may not always work, but China has a lot more confidence now than it did when it first dealt with Trump in Trump's first term.
I was going to ask, how much does that matter that Beijing understands President Trump? I mean, I wonder how long-lasting the changes will be when it comes to everything that he's setting up on the trade front when he's leaving in 3 years, or does the next government also follow through?
Well, we don't know. It's a lot depends on the internal politics of the United States. And so far, President Trump's got free reign. He virtually controls all three branches of government, even to some degree the Supreme Court. Now, there could be election changes in 2026, November midterm elections, and if either House, the Senate, or the House of Representatives turns Democrat, that's going to very dramatically change Trump's control over not only the United States, but also the world. That's a big potential watershed development.
That's Max Baucus. He is former U.S. ambassador to China, speaking earlier with Bloomberg TV host Shery and Avril Hong, bringing it to you here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. And as promised earlier, we'll take a closer look now at the earnings from Apple and Amazon that were reported after the bell. I'm joined now by Ross Mayfield. He is investment strategist at Baird Private Wealth Management. Ross is on the line from Louisville, Kentucky. Thank you so much for making time to chat with me. I'd like to begin with the earnings that we had after the bell. Apple and Amazon. Break down what you think you heard from Apple, because this China revenue figure, I think, obviously was disappointing, and that seemed to have rattled the stock a bit in late trading.
It did. Obviously, a big market, still a lot of interlinkages between Apple and China, but I think the resilient domestic demand is the big story. And, you know, Apple gets lumped in as an AI stock, as a Mag 7, but this is really a retail business, and they are still proving that they have the goods when it comes to pushing product and beating estimates on that front. So I think the China news, as you mentioned, disappointing, but I think there's going to be a lot of disappointing quarters for companies operating in China over the next couple of years. So it's good to see that the domestic revenues and domestic sales can backfill a little bit. Yeah,
and Apple also with an upbeat forecast for the current quarter, the holiday season quarter. Apple is expecting revenue to rise between 10 and 12% for the current quarter. That seems to be pretty strong, given everything that you're describing, that this is essentially a high-end consumer products company.
Yeah, exactly. I mean, I think for a lot of this quarter, if not, most of this year, we've been consistently waiting for the consumer to stop spending. And there's been hiccups. It hasn't been perfect, but by and large, the consumer stocks have been strong, and the consumer has continued to chug along, particularly, as you mentioned, the high-end consumer, bolstered by the wealth effect, strong stock market, strong housing prices, a lot of home equity, but ultimately underpinned by a job market that isn't hiring as many people, but isn't really firing either, and wage growth is still strong. So it's not the perfect consumer environment, but it is good enough. And for a company like Apple, obviously able to capitalize on a decent consumer backdrop heading into the holidays.
So we also heard from Amazon, the company's cloud unit with its strongest growth rate in nearly 3 years. Amazon Web Services with revenue of $33 billion, and that represents a 20% increase from the prior year. What does this say to you about the way that Amazon is dealing with this AI trade right now?
I think it's exactly what the market needs. Obviously, we got the update from NVIDIA at GTC the other day. But all of these updates around AI prove that this theme continues apace, that there's real money, real demand, real spending, real earnings, that it is, in my opinion, not close to a bubble, that it is underlined by very real fundamentals. And when you see companies at the size of Amazon and NVIDIA still beating estimates like this and having blowout quarter after blowout quarter in the AI-linked areas of their business, I think it proves that we're still early in this AI cycle. I think the calls for a bubble, while understandable, are a little bit misled.
Maybe premature? Do you think we'll eventually burst the bubble?
Sure. Yeah, I think probably. I mean, anytime you have a new technology, you get an enthusiasm, you get a lot of spending without 100% certainty on what the end product or, the software stack on top of it entirely looks like. So we might get there one day, but certainly I think the fundamentals have matched most of the price increases right now, at least in the big AI-linked stocks. And then I don't, it's a little bit more anecdotal, but I don't sense the kind of broad enthusiasm or euphoria. It still seems to me like there's a lot of trepidation around this theme. And to me, that means we're not in a bubble yet. I mean, it's very much a psychological thing, and I just don't see it yet.
Okay, fair enough. There has been some concern expressed, though, about the ROI, the return on investment, and whether or not users ultimately are willing to pay for the services that are offered in these kind of AI systems. Is that a reasonable kind of concern to have?
Yeah, absolutely. I don't think, just because I do think that we're not in a bubble yet and that this theme could continue, I do think it's fair to question what is the use case for businesses across different sectors. I mean, we've seen so far, upticks in productivity. We're seeing a rapid advancement in agentic AI and other use cases for this technology. And particularly, the important thing is, all right, we're seeing the tech companies that are deeply involved with this technology see growth, see revenue growth, see stock price appreciation. What does it mean for a consumer staples company? What does it mean for an industrials company? What does it mean for a small business in Louisville, Kentucky, right? So it will be important to build the software layer on top to see what the use cases are that unlock the next layer of productivity. But I think it's too early to determine that that's not, that won't happen, or that's not being seen yet. There are plenty of examples if you listen to some of these earnings calls of companies finding really useful ways to roll out AI products.
Ross, we're getting some breaking news by way of Reuters. The company is reporting that Netflix is actively exploring a bid for Warner Brothers Discovery, both the studio and the streaming business. How are you feeling about the media landscape right now? Are there opportunities where you would put money to work here? I know that some of these businesses are referred to as legacy media. Maybe you don't believe it represents an opportunity, but I'm wondering how you're thinking more broadly about media stocks in general.
Yeah, I think the media landscape is changing kind of drastically underneath our feet. I mean, the post-COVID shift in how people view going to the movies and the cost of doing so. Anytime there's massive change, I think there's opportunity. Now, I'm hesitant to get involved with stocks doing big mergers, big acquisitions, especially if they involve taking on a lot of debt. It's often a really hard hurdle to overcome. This would be a big bite at the apple for a company like Netflix. But I think there's plenty of opportunity here. I mean, even looking, not to say that something like Google is some unheard of company or undiscovered company, but if you look at their results and see, what YouTube is doing, I mean, this is in theory, or at least adjacently, a media company, and it's seeing rapid growth. So I think the landscape is changing. The demographics are changing, but there's plenty of opportunity out there. I'm a little hesitant about big acquisitions, though. That's just kind of a rule of thumb across all industry.
So we had the Fed rate decision on Wednesday and a message from Fed Chair Jay Powell where he kind of pushed back on this idea that we may see, or it's a foregone conclusion that we will see a December rate cut. Do you think that represents a significant headwind for the equity market, the idea that a rate cut in December may be off the table?
I don't think so. I think broadly, directionality is more important than the pace or the timing. So the fact that we know the Fed is likely to continue cutting rates is the more important thing than whether we get one in December or not. I also think, I understand Chair Powell's, impulse to kind of tamp down some of the rate cut speculation and maybe try to let a little air out of the equity market or some of the speculation. I understand that impetus fully. But I think it's still likely we get a rate cut in December. I think the labor market data that the Fed is seeing kind of demands it. The lack of upside pressure from inflation demands it. And quite frankly, they're just, even if we were at a neutral place, the Fed funds rate is still in restrictive territory. So I think it makes sense for them to at least get back to a neutral stance and then evaluate the landscape from there. So as long as we don't get to December, and even if the Fed doesn't cut, as long as we're not hearing hawkish language about pause or potential hikes down the road, I think the equity market's going to be just fine with the Fed stance. Okay,
Ross, we'll leave it there. Thanks so much. Ross Mayfield is the investment strategist at Baird Private Wealth Management, joining today from Louisville, Kentucky on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.